Hi, and welcome to the Austmine webinar on self-managed superannuation funds. My name's Jared Bleachmore, and I'm a specialist in the SMSF space with Resource Super. I think from this point on, I'll refer to them as SMSFs for simplicity. So we've got a lot to get through in a short amount of time, so let's get started. For those of you who are existing members, a unique offering allows you to seamlessly transfer your existing account balance across to Resource Super Self-Managed. If you're not a member, don't fear. We're here to make the process nice and simple for you. Everyone in the workforce today has a superannuation fund. However, not everyone understands what can be done or achieved with your super. The great benefit of an SMSF is it allows people to pool their balances together, buy larger assets, and streamline the retirement strategy of the household. In years gone by, traditional thinking was that SMSFs were established generally by those nearing retirement or in retirement. March 2017 data from the ATO indicate that over 30% of newly established SMSFs came from the 35 to 44 year age group. So what this tells us is a greater number of the population are starting to understand the benefits of SMSF and are starting to take advantage. So before we start, I'd like to draw your attention to the disclaimer. Information contained in the document is obviously just general information only. It doesn't take into account any personal circumstances that apply to you. Past performance is not a reliable indicator of future performance. Therefore, any examples that we provided in the presentation are for illustration purposes only and should not be relied on when making investment decisions. So let's get into the details. Firstly, we'll provide a bit of an overview on the super environment. Then we'll discuss why have an SMSF. We'll look at how a fund is structured, how to get the most out of your SMSF, what kind of things can you invest in. We'll look at how to establish a fund. We'll then do a recap, and then we'll provide some details around how you can get in touch with us. As of June 2017, the total balance of the Australian superannuation environment is currently $2.3 trillion. The Australian Bureau of Statistics has declared super is our second largest asset behind the family home. So if you think about that, if you don't have a home, then more often than not, super is your largest asset. SMSFs are popular. Currently, there's over 1.1 million members in self-managed super funds in Australia. If you think about the 2.3 trillion that exists in the environment, approximately 30% of that is currently held within SMSFs. So why have an SMSF? And what are they all about? An SMSF is a super fund where the members are the trustees of their own fund. As long as you're over the age of 18, an Australian resident, and haven't been convicted of a dishonest offence, you're eligible to establish your own fund. A fund is permitted to have up to 4 members, and whilst commonly it's a spouse, these 4 members could be siblings, adult children, or any other eligible person, subject to no member being an employee of another. This gives the trustees a greater control over their own money and investment strategy. What it also provides is unmatched investment choices. What's some examples of this? It could be collectible items, residential property, commercial property, or even gold bullion. What they also allow is tax-effective planning strategies. So that could be with the use of reserves or segregated assets. I just mentioned this before, however, it's a key point and what generates a lot of interest in SMSF. It's that ability to purchase property with the use of debt. So let's take a look at how an SMSF is structured. We start with a trustee. The trustee can either be a company or it can be an individual. The trustee is the legal owner of the assets held within the SMSF. Whilst it is possible to be the individual trustee of your SMSF, at Resource Super, we strongly advise a corporate trustee is implemented. This is for 2 reasons. 1 is a company provides that additional layer of asset security, and 2, it allows administration efficiency in the event a member decides to leave the fund or in the event a member joins the fund. An SMSF can have up to 4 members. Each member's relative balance is quarantined within the fund, so you're always able to identify an individual balance, even when the fund has borrowed money. That's what you see represented by those 2 yellow boxes. The accumulation and pension accounts are representative of which stage of retirement that you're at. If you're still in that accumulation phase and building to retirement, you'll only have an accumulation account. Once you hit preservation age and you can access your super, That's when you'll have a pension account, and the number of pension accounts you can have is unlimited, and this helps with tax planning strategies in retirement. There are significant tax concessions for any assets held inside of superannuation, and this includes the purchase of a property. Income generated from any assets is taxed at a maximum rate of 15% and not at your personal tax rate. In retirement, it gets even better. The income generated from your assets is taxed at 0%, subject to your balance being less than $1.6 million. In addition, the capital gains tax on the sale of an asset in accumulation phase is a maximum of 10% if the asset is held for more than 12 months. Again, in retirement, the capital gain will reduce to nil, subject to your balance being less than 1.6 million. So based on this exemption alone, you can see that buying assets in super, such as an investment property, can literally save hundreds of thousands in tax over the long term. So how do we maximise your SMSF? We always start with concessional contributions. This means contributions made to your account which receive concessional tax treatment. These include the SG contributions that your employer makes each month, which is 9.5% of your base earnings, but also your salary sacrifice payments that you're entitled to make. The maximum amount of concessional contributions that you can contribute each year is $25,000. This has been reduced as of 1 July 2017. In terms of non-concessional contributions or after-tax money, we're allowed to contribute up to $100,000 per annum. Non-concessional means we're not getting any tax benefits from making those contributions, apart from getting the money inside super, which will be tax-free at age 60. Investing in your SMSF. So what can you invest in? You can invest in Australian shares, international shares, managed funds. They're assets you could traditionally invest in most super funds. Where we can get a bit more adventurous is when we look at residential property, commercial property, term deposits, currencies, options and futures, and collectibles. I'll say on collectibles just to illustrate a point. So within your SMSF, yes, you can go and buy an artwork, but can you hang that artwork on your wall at home? And the answer is no. There's a sole purpose test that applies to SMSFs, and what it means is any investments made in your fund must be for the sole purpose of providing benefits for your retirement. Therefore, that artwork would need to be insured and securely stored away in a place that is not your principal place of residence, and also in a place that you can't see it. When we're out on site and we're talking to members, the most common question we get asked is, can I buy a property with my super, and how do I do it? So the answer is yes, subject to a few rules. You can buy a residential property, however you can't purchase that property from yourself or anyone related to you. So for any existing properties you hold, you can't transfer or sell those properties to your SMSF. If it's commercial property, however, there's a few more concessions which make this possible. You can sell commercial property to your SMSF. A common strategy would be to have your SMSF purchase your business premises and have your business lease that property from your SMSF. Again, we mentioned the maximum 10% capital gains tax if we hold that asset for more than 12 months, and also if we sell it in retirement phase, it's potentially zero. We know that the rental income is taxed at a maximum of 15%, and the SMSF, being a separate legal entity, provides that additional layer of asset protection. Just like an investment property or asset held in your personal name, any interest expense that's accrued or any other expenses are tax deductible to the fund. Another common question, if it's residential property, can you or anyone related to you live in that property? The answer is a very definitive no, and that's even if you lease it to a related party on market terms. And abiding by the rules is crucial because ultimately the responsibility and accountability of the administration of the fund lies with the trustees, and that's you, the member. So in saying that, that's why it's highly recommended to enlist the help of licensed professionals like Resource Super to guide you through the annual compliance requirements. So let's take a quick look at why SMSF property strategies have become so popular. So generally when you go into a super fund, you're given a choice between conservative and high growth investment options. A lot of people fall into the balanced investment option, meaning that they can expect around 7% returns per annum, and that's taking into account average return over a long period of time. Listed in this slide are the assumptions we'll make for this case study. They include the purchase of a property within a super fund of $500,000. In this case, we're also using debt, which equates to 70% of the property value or $350,000. As you can see from the following graph, the SMSF's net value has grown to 1.385 million, and that's inclusive of repayment of the loan. And this is in comparison to the 1.09 million achieved in a regular super fund. So looking at that, that's a $293,000 difference in favour of the SMSF strategy. Property in super is not for everyone, but having the ability to pool your money and leverage your funds, combined with concessional tax rates, makes it undeniably one of the most powerful and tax-effective wealth accumulation strategies available. So let's go on and look at how to establish a self-managed super fund. Basically, in simplistic terms, we look at transferring your existing super across into the newly established SMSF. So what's involved? The first step is to decide on a name for your fund and a name for the company that is a trustee. The company will have to have a unique name, however the SMSF can have names similar to other funds. Next step is to establish the SMSF trust deed and register the fund with the ATO. The next step is critical and it's enforced by law. When you roll out your existing funds into an SMSF, what can happen is you can lose existing insurance benefits. The law states that we must consider the implications prior to rolling over the full amount to ensure that you can replace any existing insurance benefit. Once we've taken care of that, we then roll over the super, and that super goes into a normal bank account owned in the name of the SMSF. Next step is where you complete an induction with you to make sure you know how to check in, log your balance, and manage your SMSF online. After this, we can look at implementing the investment strategy subject to your individual needs as members of the SMSF. We then move to the ongoing administration of the fund, which includes regularly looking at the investment strategy and the objectives as members, but also ticking off the annual tax returns and compliance requirements. So let's now quickly recap. Superannuation is a legal tax haven, so why not put it to use? An SMSF allows the consolidation of member accounts to basically pool your funds and have a streamlined retirement strategy. Being its own separate legal entity, it affords us additional asset protection, and it gives us the additional option to borrow money to invest in direct property. We've covered off on the unmatched control and flexibility that an SMSF provides, and we've touched on the extensive investment options available. Pooling your money has the potential for significant cost savings, and whilst we haven't touched on a lot in this presentation, just know that there's additional estate planning options available to SMSFs. So this brings us to the conclusion of the webinar, and I hope you can see after this webinar that we're more than just a super fund. So I've listed my contact details below, along with the general managers applicable to each state. So I encourage you to get in touch with us with any questions that you have from today's presentation, as we'd be more than happy to help. Look forward to chatting to you soon.